are live from Bloomberg World Headquarters in New York City. I'm Matt Miller.
And I'm Kailey Leinz. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, the fallout from FTX's collapse shows few signs of easing as we all wait and watch for the next domino to fall. We'll get expert insight from Levin of Chainalysis.
And as the industry reckons with direct exposures, we'll be speaking with Jeremy Allaire, the CEO of Circle, one of the firms that's been relatively isolated from the contagion.
But celebrities haven't been isolated or immune to the fallout. Details on the sports stars that have been entangled in the FTX mess.
All right, so all of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go, is your function, and you'll see that Bitcoin is back above that 16,000 level, barely, only $77 above it right now, up about 3% on the day. Remember, it broke below 16K yesterday, but that really kind of seems to be the range we are in now post FTX bankruptcy. Ether's gaining as well. It's true for pretty much digital currencies across the board. It's trading right now at $1,100 or so dollars, and different altcoins like Litecoin and Dogecoin are actually kind of ripping. Litecoin is up 14% on the day, so that's something interesting to keep an eye on. And then finally, Coinbase, of course, the rival exchange that actually hit a record low yesterday, is rebounding a bit in this Tuesday session, up about 3%. And we know that some investors are coming in to buy the dip in that stock, including Cathie Wood of ARK Investment Management. She snapped up about 1.3 million shares so far in the month of November, Matt.
Analysts, though, are still shunning the stock. It's very interesting to take a longer-term look at Coinbase. I've got the price up here in the top half, and even as we went from $3.50 down to $40 a share at the early part of the year, you still had more than 70% of analysts calling the shares a buy. Well, that has declined now to 43.5% as the stock comes under more pressure. Market participants around the world really keeping an eye right now on how far the crypto contagion might spread.
The collapse of FTX.
The spillover to broader macro is actually very limited.
There's not a lot of spillover other than the wealth effects.
If you put tokens or coins on an exchange, you absorb all of those losses. That's the reason there's no contagion outside of the financial sector.
I think the wealth effect is real.
The overall broader market has pretty much shrugged it off.
You start looking at the amount of money that was being spent by even FTX on advertising, crypto as a whole, right? I think this is going to feed into the economy.
There is some concern about leverage ratios that have built up.
A liquidity crisis and a liquidation cascade.
As people need to roll over their debt, they face those higher interest rates.
FTX, in Voyager, in Celsius, in Three Arrows Capital, and then going back to Terra.
It's a real stain.
I think there are still chapters left in this crypto story.
Now, Genesis is just the latest firm to get caught up in the chaos. Sonali Basak is here with the scoop. Sonali?
Thank you so much, Matt. We're looking at crypto brokerage Genesis because it has been scouring the globe for at least $1 billion in fresh capital for its lending unit, and it's privately warning investors that it might become the latest casualty and that it might have to file for bankruptcy if that funding doesn't materialize. Now, it's unclear how fast the liquidity crunch causes more companies to fall, but so far, there's been some real damage done really quickly, and the warning from Genesis to investors has only come days since the company's trading arm announced more than $170 million tied up in FTX. The lending business has halted withdrawals within a week, spurring its lending partner Gemini Earn to halt withdrawals as well. Now, let's move over to FTX, because as the bankruptcy proceedings begin in Delaware, it's just one example of how many people are owed money in one instance of a bankruptcy. More than 1 million customers had funds tied up, and more than $3 billion were owed to 50 creditors, including Genesis. Now, in the case of FTX, a lawyer for the company said that during a bankruptcy hearing on Tuesday that while crypto crisis is well documented overall, the FTX drama is the latest and the largest failure with effectively a run on the bank with respect to international exchange as well as its U.S. exchange. Investigators, lawmakers, and regulators around the world are now watching how this plays out to make sure their customers find some redemption.
All right, Sonali, thanks very much. Joining us now to help figure stuff out is Levin. He's co-founder and chief strategy officer at Chainalysis. It's a blockchain analysis firm. And before we get into the story that your software makes a little bit more comprehensible from the data on the blockchain, Jonathan, how exposed are you to FTX? You've been listed as a creditor, and you're helping to find assets in bankruptcy.
Thanks so much. Thanks for having me on the show. Chainalysis is a blockchain analysis firm that is used to actually track funds that move on the blockchain. And so, when an incident like this happens, everyone turns to understand where are all the assets sitting now, and particularly for the administrators of FTX, in order to ensure that there can be the orderly, wind down of the operation and the return of as many customer deposits as possible. They use Chainalysis to be able to find those assets and discover how those can be returned to their due creditors.
Yeah. What about the exposure that you have though? Is it a bill that Chainalysis has due from FTX? Are you professionally or personally invested in or have funds on the exchange because you were studying cryptocurrencies at Oxford a long time ago? Maybe you're an early investor.
So Chainalysis, did provide software and services to FTX. That continues, at this time, so that they can actually understand where the money is going and where the money is coming from, in order to best understand the position of assets. And what we have is the ability to help ensure that as funds are moving, that actually we can actually alert other people so that they can ensure that any of the funds that should not be taken out from the exchange are duly returned to the estate, and that they can have a process to return that money to creditors.
Yeah, and we heard about some of those stolen funds at the hearing today. One of the lawyers told the bankruptcy court that they have a substantial amount of assets that have either been stolen or are missing. So what are you finding when you're doing this tracking? What kind of activity are you seeing?
So we have seen the amount of funds that were associated with FTX wallets, and some of the funds that were taken at the time when this whole event was unfolding. And we've seen actually some of those funds start to move in ways which have been typically used to sort of obfuscate flows of funds. And we've seen swapping from one cryptocurrency into another. And all of that is actually able to be tracked using our software. And then, we sell, transaction monitoring software to companies like FTX and, over 500 other exchange venues around the world, which can then get notifications if they are receiving, some of those funds, and asset freezes can be put in place so that due process can be followed.
On the subject of different exchange venues, we saw in the aftermath of FTX's implosion that billions of dollars were yanked out of centralized exchanges. What kind of activity are you seeing in decentralized exchanges? How much are people rushing into self-custody?
So we have seen, volumes actually, come up in some of the decentralized exchanges. One of the things that, typically happens when you have decentralized exchanges is that there's a lot more volume in times of high volatility. You have people moving money between these venues to ensure that prices remain sort of normalized across the different venues. And so we've seen a tick up in volumes across decentralized exchanges. We've also seen an outflow to personal wallets. People actually taking money away from venues and making sure that they have control over their funds.
So when you see, a giant wallet like Coinbase holding all of its customer funds, has that just been emptied? Even if people think Coinbase is safe, I've heard a lot of people say they're still taking their money off the exchange and putting it into personal wallets.
I think I would separate this out into sort of institutional cryptocurrency transactions and retail transactions. I think that what we have seen is that some of the institutional players that have very large positions and who are sort of more sophisticated operationally have actually managed to sort of move some of the large sums of money that show in a lot of the data. I think when it comes to retail customers, and I think when it comes to trustworthy venues, you'll see that it's a matter of convenience for a lot of people that it's safer for them to have money inside a reputable and well-regulated venue, rather than to assume all of the risks of custodying your own assets. And so, there's a couple of different stories playing out in the data that we see.
Jonathan, there are a lot of different stories about the hacked coins from FTX. Maybe they were moved on purpose for bankruptcy purposes, or was it a hack? Can you give us a definitive answer on what happened to those coins and quantify, the amount that left FTX, and do you know where it all is now?
So we can't give definitive answers on exactly what happened, and this will continue to play out over a few weeks, a few months potentially as this investigation unfolds. It is possible though to track all of the different money that actually left FTX as this whole saga went down, and we actually managed to see despite money moving across different bridges and in switching between different cryptocurrencies, that money is still able to be followed and still given as signals to exchanges to prevent that money from being cashed out using Chainalysis software.
And Jonathan, finally, a lot of regulatory scrutiny has been surrounding the fact that there's a certain lack of consumer protections in this industry. How should people protect themselves from the crashes of the future?
I think it's a really important conversation to be had around, how are we going to best segregate customer funds? How are we going to ensure that there is adequate protections and bankruptcy proceedings that do protect, retail investors and investors more generally? And, that is an ongoing conversation that has to be had with regulators. I think in the meantime, having consumers, have regulated venues where they are local in their geography and they have the right protections for the consumers, that is already possible in a lot of geographies. And I think people should look at those venues as places where they should be conducting their activity. And obviously for the more technically sophisticated, being able to actually control your own cryptocurrency with your own keys, with your own backup phrases, is really sort of something that sophisticated consumers are flocking to at this time in order to ensure the protection of their assets.
Jonathan, great to get your insight. Really appreciate you joining us. He studied economics and cryptocurrencies at Oxford, then founded and is now the Chief Strategy Officer at Chainalysis.
All right, well, coming up, we're going to continue the conversation on the fallout from FTX and ultimately what it has meant for stablecoins. The CEO of Circle, Jeremy Allaire, will join us next.
And crypto contagion spreads to celebrities, how Tom Brady and Steph Curry are getting caught up in the FTX fallout.
And of course, to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
We're not getting comprehensive reform anytime soon. The most that Congress can be expected to do with the crypto events of the past few weeks is to focus on something they kind of understand, which is stablecoins. Stablecoins look a little bit like money market funds, a little bit like deposit accounts. They get that, and that's something they can legislate on. The rest of it, I think that we are years away from a comprehensive legislative solution.
That was Isaac Boltanski, Director of Policy Research at BTIG, speaking earlier on Bloomberg. And to continue the conversation on stablecoins, joining us now is Jeremy Allaire, CEO of Circle, which is the U.S. payments group, which issues and operates the USDC stablecoin. Jeremy, thanks so much for being here. We'll talk more about kind of stablecoins and regulatory issues in just a moment. But on FTX specifically, you have detailed what Circle's exposure to that collapse was. We understand you have a tiny quote-unquote equity holding worth about $10.6 million. So you're relatively more insulated here, but are you still feeling it in some way?
Well, what we've primarily seen over the past couple of weeks is, as noted, I think in some of your earlier coverage, there's been a flight to safety and a flight to quality. And so we've seen an increase in the amount of USDC that people want to hold. I think as people get out of volatile markets, stablecoins become a really important place to store value. And so really for us in the short term, the fact that we are a regulated dollar-based digital currency obviously is important. The kind of trust and transparency that we operate under is really vital. And I think in an environment where there are many of these kind of unregulated or offshore institutions that are very opaque, people don't understand them. Onshore U.S. financial system regulated dollar-based digital currencies are attractive. So for us, primarily, we've seen it kind of accrue to USDC.
Well, Jeremy, your operations are one thing, but as we've all learned in the last several weeks, it's also about who you're affiliated with, who those counterparties are, which is why dominoes continue to fall in the wake of FTX. How has this maybe altered your thinking about who you want to work with?
Well, it's a good question. So Circle doesn't operate an exchange or derivatives platform. We're not a prime brokerage firm. And so kind of some of the classic market structures that are fundamentally risk-taking businesses, that isn't our business. So we service thousands of companies, corporations, institutions, fintechs, and others who want sort of digital dollar dial tone on the internet. And so we can provide that service to them. And so we're continuing to expand the number of companies, the diversity of industries of companies that we work with. I think in the short to medium term, there certainly will be players in our industry that either go out of business or reduce the amount of activity that they have. But we're in it for the long haul. We founded the company 9 years ago. I first testified to the Senate 9 years ago on the importance of regulation, and I think we're continuing to build this.
Yeah, and you've been named to the high-level advisory group on fintech for the IMF, and your bona fides speak for themselves. Nonetheless, you work with companies, DCG, for example. You have a strategic partnership with the umbrella group under which Genesis falls, and they've been hit by the fallout. Does that give you pause?
Yeah, absolutely. I think we had a product offering called Circle Yield, which relied on Genesis. As things became really challenging after the Terra Luna environment, we offered all of the customers of that the ability to redeem their Circle Yield deposits early, which the overwhelming majority did. And as recently as this last week, we only had about $2.6 million of over-collateralized lending, which I think actually has now been entirely closed out. So we don't have any exposure on that. And certainly, that's a delicate and real-time situation that everyone's watching closely.
But has your due diligence changed at all when you look into the companies with whom you form partnerships? When you look into counterparty risk, do you increase your due diligence, or have you always had levels with which you're comfortable?
The first is we operate with a broad sort of risk management framework, enterprise risk management framework, and we have regulators that supervise that as well. And so we feel like we've run the company well. I think it certainly is an environment where due diligence is going to evolve. And I think one of the things that we've said and offered is that we'd like to see more and more of the treasuries and activities of firms actually on chain, because as you get to things operating on chain, you have greater ability to verify balance sheets, to verify credit, to verify where funds are. And so we're really trying to move to this more modernized system of blockchain-based finance. When people have these opaque, kind of closed off systems, you don't have as much visibility. It's one of the promises of blockchain is to create greater transparency. And so we're just continuing to want to build towards that infrastructure and ultimately due diligence model as well.
Well, Jeremy, you've mentioned regulation a few times now, so I just want to end there. You had a piece out in Market Watch today talking about how some critics in this episode have contended that basically if you regulate, if you legislate, it will legitimize this industry and that you shouldn't do that. You say that that is cynical and wrong-headed, that the consequences of inaction are severe and the benefits of regulatory clarity are immense. What would you tackle first? What is your message to regulatory authorities?
Well, the message in my letter to leadership in Congress recently and reiterated in this piece in Market Watch, as you note, is let's start with the low-hanging fruit, which is stablecoins. Payment stablecoins are very understandable. They are a foundational building block of this entire innovation. And it's something that I think everyone can get their head wrapped around, and it's a very important place to start. And it is a place where there still exists very significant risk. Offshore dollar stablecoins pose, I believe, significant risk. And so this is a place where, as Congress called for over a year ago, urgent action is needed. If anything, the events of this spring and now this fall have demonstrated that even greater urgency.
All right, Circle CEO Jeremy Allaire, thank you so much for joining us. Really appreciate your time. And of course, for more crypto content, words are hard, Matt. Check out Bloomberg Crypto. It's a podcast which dives deeper than the daily market buzz to explore how this asset class is changing the way we live. Look for that every week through the Bloomberg Professional app, iHeartRadio, or wherever you get your podcasts. This is Bloomberg. This is Bloomberg Crypto. I'm Kailey Leinz with Matt Miller. Now to some crypto stories that caught our attention this week. It's the latest crypto mystery. Nobody is sure who owns the crypto exchange Wobi after co-founder Leon Lee sold his stake. According to people familiar, the crypto mogul Justin Sun spent about $1 billion to acquire roughly 60% of the shareholding, but kept his name out of the deal to avoid scrutiny from China, where crypto is mostly banned. Sun, however, has repeatedly denied any involvement.
All right, when it comes to trading strategies, Sam Trabucco may have gotten more inspiration from Vegas than he did from Wall Street. The former Alameda co-CEO recently revealed how much he applied what he learned at the card tables to the crypto market, and even said Alameda employed Vegas-like risky bets. Trabucco stepped down in August, but such aggressive risk-taking is now on display at the center of the FTX blowup.
And not even celebrities are immune to the FTX fallout. Sports stars Tom Brady and Steph Curry are among the big names a Texas regulator is investigating over potential securities law violations tied to their promotions of FTX. The state securities board says it's looking at payments they received to endorse FTX US, along with what disclosures were made and how accessible they were to retail investors. And Matt, full disclosure, from a sports perspective, I'm a Denver Broncos fan, not a Tom Brady fan, but a lot of people out there are and will trust what he says. So if you're promoting a product and you're Tom Brady, you may have some influence. That's something regulators are looking into. And we've already seen the SEC looking into something similar with that fine Kim Kardashian received for promoting crypto.
Yeah, good point. I mean, he's surely going to fight against this, as will Steph Curry, and you can understand that they may not have had the high-level understanding. They may not have done the due diligence that a lot of the counterparties in crypto hadn't done either.
That is something we've definitely come to learn over the last several weeks. Thank you so much for joining us on Bloomberg Crypto. We'll be back next Tuesday at 1 p.m. Eastern Time, so make sure to join us. This is Bloomberg.